All right, everybody, I want to go over these order block patterns. I made a video before and I realized I made a mistake in it. I called a bullish order block a bearish order block. So when you see me talking about it and I call it a bearish order block, I made a mistake. So apologize for that. But I'm going to put this video out first. So hopefully that'll correct that mistake. But these are the patterns we look for the order blocks. These are your bullish. These three are your bullish and these three are your bearish. So basically, this is a bullish engulfing. So you'll see the bullish candle, the green candle that's going up. It goes over the previous candle. And what you would like to see is this continue up a little bit more maybe, and then test back into this order block. And this would kind of be what you'd be looking for an entry, but when it tests back into it, if it broke microstructure. So there's a little bit more to this, but I just want y'all to see the patterns. So you got the bullish engulfing, which the next candle or so may run up, and then eventually it'll test back down and then it'll go again. I'll go to the bottom one first because this one's a little more complicated. This is what we call a bullish, bearish, bullish. So if you see a bullish, bearish, bullish, well, then likely it's going to come back up. It's going to test down into this order block area again, and it's going to go back up. And you can mark off these order blocks for this. For the bullish engulfing, you would go to the last down candle before the bullish engulfing, and you would go from the top of the body to the bottom of the wick. So even if there's a wick up here, it doesn't matter too much. You'd go from the top of the body to the bottom of the wick. For the bullish, bearish, bullish, you would go to the last down candle before the up candle, which is kind of what we look for order blocks. And you'd go from the body of the top of the body down to the bottom of the wick of that candle. So this is the bullish, bearish, bullish. This one looks a little different, and this doesn't look bearish. When you first look at it, you're kind of thinking, well, this is engulfing this. How do you tell? With this one, you want to watch the candles after it. If you've got green, 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 and it just breaks multiple candles, that before it, that means it's breaking microstructure. And so that basically means you need to, this is going to be your order block. So for this one, you would actually kind of mark up this one. Instead of marking up the down candle before the up, you would mark up this green candle here as the actual order block. If you've got multiple green candles leaving the area, and then you'd wait for the pullback into here. And then go back up, and this would be your entry zone when it pulls back into it. So on the opposite of that, you've got the bearish candles. So this is a bearish engulfing. So this would break out, come back into the zone, and then drop again. And you would want to take your entry somewhere in here. This is just one thing to look at. When you're looking at the market, there's a lot of things you need to look at for confluences. You don't just take off one thing. You look at one thing and take a trade, but this is just one extra confluence to add to you. And it also helps with entries too, you can break it down into the lower time frame, look for smaller order blocks and find more tight entries. If this was an order block on the 1 hour, if you were to take an entry in here, you'd put your stop loss up here, and that may be 20 pips. But if you can break down that same area we put a 1 hour order block, and then you break down that same candle into the 5 minute or the 1 minute, you may find a little order block in here that's like just this little part of this wick, and that may be a 2 or 3 or 4 pip entry or whatever. So, like my other video said, the stocks may be different. I don't know exactly how y'all work it, but it allows you a more precise entry to break it down into the smaller time frames. So anyway, the bearish candles, you get the bearish engulfing. It would break, come back into the order block, and then go. This one is the bearish, bullish, bearish. So you'd look for this 3 candles in a row, and then you'd wait for it to break out, test back into it, and then drop again. And then this one again is the one that looks a little weird because this bearish looks like it, this bullish looks like it's going up. But you would look at the consecutive candles that come after it, and you would watch those candles drop. And if it got outside of the zone and then pull back in to test into that order block, then that possibly could be your entry as it dropped again. So again, this is just one thing to look for. It kind of gives you can look for these on the dailies, 8 hours, 4 hours, any time frame really. And the higher the time frame, the stronger they are. So if you look up at you find an 8 hour order block, and you start to look at the 4 hour and the 1 hour, and you notice that it's working back up into the 8 hour order block, there's a pretty good chance of reversal in there. Now you would want to see it get to that point and then start to break down or whatever. I'll do this one. You want to see it get to that point and start to break down, and then show some breaks of previous candles. So let's say you've got some green candles coming up. Well, and then if this starts to break, if this has a bearish order block, like a bearish engulfing, and then it starts to, as it comes down with this run here, if it breaks multiple candles that were on this side, green candles, if it shows breaks of multiple structures as it goes down, and then it retests back into here, there's a better chance of reversal, because it's starting to show you that the sellers are stepping in and starting to push this price down. And then it'll retest back into that zone, kind of to fill in the algorithm. And if there's any missing price in between, you'll see on my next video what that means. But if there's any missing price in between, it sometimes fills that in. Now, it doesn't always come back into the order block. If there's a little bit of missing price between candles in here, it'll come back to that missing price just to fill in the algorithm, and then it'll drop. So you may have to sometimes set an entry a little bit outside, but still, when you break it down into lower time frames, that's not much of a stop loss. It really does like let you tighten up your entries there. So anyway, kind of, if you want to learn this strategy, I guess you don't have to, but this is just another way to look at things. But these are the patterns you would look for. Study this video. You've got your bullish engulfing. For this one, you'd want to wait for it to break out a couple candles or so, two or three candles in a row, breaking some previous candles over here, previous wicks over here, and then drop back into the zone. And then you got your bullish, bearish, bullish. This one, you got your bearish engulfing. You want to break out, come back. And then you've got this one, which again looks a little weird, but if you've got multiple red candles and then it pulls back into here and it drops, that would be something else to look for. And you got your bearish, bullish, bearish, where it would come back into that zone and drop again. So these are just patterns to look for in the market that lets you kind of know where institutional money may have stepped in. And these order blocks can actually be protected. You'll notice a lot of times, sometimes price will run up into this zone, then it'll run up real big and it'll come back into this zone, and then run up real big and come back into the zone, and then it'll run real big. So you can sometimes actually catch, if you like the price trap in a way, you could let it run up a little bit, take profit, and then when it tests back down, you could take another buy, and you can kind of trap that price and take buys and sells in that area before it breaks out. So there's different ways to play this, but this just gives you like levels in the market that show you where price could reverse or could be protected, so that it's not going to go lower than that level or not go higher than that level. So you would know where to get your entries in. So anyway, hopefully this is helpful. If you have any questions, reach out to me. Much love.